Unity stock price dropped over 35% after reporting earnings. And I want to say honestly, I don't believe I have any tears left after this market downturn. All jokes aside, on today's episode, what I want to do is first take a quick look at what are some of the goods after their earnings, because there are a lot of goods. And obviously, what are some of the bads affecting overall Unity stock price? Because unfortunately, there are a lot of negativity right now. At the end, I just want to share my overall thoughts and what I'm doing with Unity stock at the moment. So let's get started. All right, so as I am recording, Unity stock price is down over 36% right now, sitting at $30.76. Let me just say, this is a company now with a market cap of roughly $9 billion. All right, so first, let's try to take a quick look at what happened. And from the top end, everything looks pretty nice, right? Revenue grew 36%, their creative solution was up 65%, and their operate solutions were up 26%. They also had an increase of customers that generate more than $100,000 in trailing 12 months revenue. That was up to 1,083 compared to 837 a year ago. So we're seeing strong growth here, right? They are also positive in net cash flow from operating activities compared to a loss of about 89 million a year ago. We're going to see a lot of that is because of stock-based compensation, but regardless, we are seeing net cash flow from operations up a bit. Now, if we take a closer look, and we also see that loss from operations took a bigger growth and is now a bigger portion of total revenue because of the huge increase in stock-based compensation. This quarter was 53% year over year compared to 47% of total revenue last year. And again, because of that huge influx of stock-based compensation expenses. And this is probably one of the bad things we're hearing a lot, but it's not the real horrible thing affecting the market. And before we take a closer look at that, let's take a closer look at some other good things. So during their presentation, Unity kind of explained how their products is still one of the best, especially here for virtual reality. They mentioned a lot of big products that kind of Meta platform mentioned earlier this month or last month. They had an event where they mentioned a lot of new virtual reality games. And a lot of those virtual reality games are being built here in Unity. For example, the NFL football game for VR with NFL Pro Era will be enabled by Unity. You have also a lot of other games coming into the platform. Not only that, but their kind of recent acquisition of Weta and Siva have really increased their kind of solutions for animation and theater kind of solutions like movie theaters. For example, the Weta tools are being used in Avatar 2, right, which just came out with the recent trailer. Another thing that they mentioned is they're seeing strong growth in their digital twins. And this is a business that continues to expand. They entered 2022 with nearly 3,000 customers in this space. And this is a very interesting space, right? And the reason they gave a great example here, and Lockheed Martin is the prime example. Lockheed Martin is a US contractor. They develop a lot of weapons, a lot of kind of national security stuff. And their first project with them started in 2017. And they only had a few seats. Within 12 months after getting that, they had about 132 licensees for Lockheed Martin and their employees. Now, kind of 5 years later, Lockheed Martin has nearly 500 licenses across 9 businesses to use for simulation, training, guidance, and collaboration. So this is the huge potential with digital twins and all the kind of aspects outside of gaming and outside of animation that could really grow Unity as a whole. The CEO also believes that they expect to drive over 30% revenue in the long term of things, but there's something impacting revenue right now, and I want to say this is probably the main thing affecting the company right now. So now if we take a closer look at their outlook, this is where things start to get scary. So we saw quarter one, they grew about 36%. Now for quarter two of 2022, they expect guidance of somewhere between 6 to 8% revenue growth. And that guidance of single digit is not looking good for the company. For 2022, they give guidance of 22 to 28%, much lower than their previous guidance, which was over 30% revenue growth. The reason for this decline in revenue growth for quarter two was because of some internal factors affecting the operate solution in Unity. And these kind of internal factors are affecting about $110 million in 2022. And that is a big portion. Remember, last year, it was their first year, I believe, that they made over $1 billion in revenue. So $110 million loss in business is a nice kind of high single digit to maybe somewhat double digit revenue for this company's total year. And the problem comes here with their Pinpointer. So Pinpointer is a solution that Unity has to kind of acquire new customers for gaming companies. So gaming companies would pay this as advertising dollars to kind of acquire new users for their games. Unfortunately, an internal conflict happened with Pinpointer and that kind of software and the kind of logistics behind it, that the efficiency of Pinpointer was decreasing because of bad data, and then this kind of flywheel effect made it very, very inefficient compared to before. And because the advertising market is very kind of data dependent, as consumers or advertisers saw that they were decreasing in efficiency, they started to spend less money. Eventually, you need to find out that there was a reason behind it within their internal programming that caused the issue. So now they're working on fixing the issues, and they believe that they will have things working back to normal. They don't believe that they will lose customers over this, because at the end of the day, the advertising market is very data dependent. So if they can increase their efficiency again, those customers will come back. The advertising market is one of those markets that really has no kind of loyalty to anybody. As long as you give them the proper kind of performance, the proper kind of user acquisition per lower cost, they're going to come to you. And as just they saw when the efficiency was dropping, customers were leaving. Once they have the efficiency back up, they believe that influx of customers will come back. They do mention is this kind of loss in revenue is not something that will come back in because that money in advertising is obviously being spent by another platform. So in this quarter, there might be some other advertisers that might be making a little bit money because of this downfall for Unity. With this kind of headwind of 110 million, they roughly expect 60% to be impacted in second quarter, 30% in third quarter, and 10% in the fourth quarter. So this is really happening. To me, I don't think this is a game over for Unity, and I do believe this stock sell-off is 100% irrational. It's just what's happening with the market. So I personally actually doubled my position for Unity in the past few hours because this is a company sitting at $9 billion market cap with huge market opportunities. At the same time, I do want to say there is some risk behind Unity at the moment. And my biggest risk is not the stock-based compensation. I believe eventually that's going to be fixed amongst itself. Right now, the tech industry is just so lowly. It's just competing against itself so much that you have to have a reason to kind of, hey, come work for us. You're going to work for us because you're going to get paid a good salary. And you're also going to be given a nice stock-based compensation. So stock-based compensation, definitely something to keep an eye out, but something that I believe will fix itself. The big risk, I believe, is, hey, they kind of gave investors that, hey, quarter two was going to be the biggest impact affected by the kind of internal factor that they saw with the Pinpointer. What I'm fearing, though, and again, what I'm fearing is they might have been a little bit too overconfident on how quickly they can fix it. And the worst thing that could happen is next earnings comes and management come and out to say, hey, I know we mentioned that quarter two was going to be the worst for this problem, but we were mistaken, and quarter three is actually going to be the worst out of this kind of quarter. And I believe if management does that, that can really tank stock prices. So the real question is management being overconfident or over-conservative with how quickly they can solve this problem? If they're being over-conservative, which I hope they are, I think this is a great buying opportunity. If they are being overconfident, I do believe there could be bigger stock price hit for Unity. So these are my overall thoughts on the company. I hope you guys enjoy it. Take care, have a good day, and see you next time.